Hi, good day to all. This is Kelvin here again. I hope that you'll have a good rest yesterday given the huge movement seen across the different asset classes after the release of this Pfizer vaccine optimism news. So for today's video, I'll be sharing with you a volatility alert video. We'll be covering with you all the key levels to watch on the S&P 500, the Nasdaq 100, the gold, and the US T-Note 10 yield. Okay, so before we start, let's take a look at the disclaimer slides. All right, good. So let's get started. Okay, let me open up the CMC trading platform. Okay, let me start with the SPX 500 first. Okay, so as you all know that in my weekly outlook video, the key long-term resistance to watch will be 3650/70. This is the monthly chart. So yesterday it actually hit this level before the start of the US cash market open on the backdrop of that Pfizer optimism COVID-19 vaccine news. So this 3650/70 is rather important because it actually confluences with a couple of elements. Technically, the upper boundary of this expanding wedge as well as a couple of Fibo extension cluster as well. And what's so important over here is that the sentiment towards the end of the day, at the end of the US closing. So let's go to the daily chart. So I could see that on the daily chart itself, there was a strong push up towards 3650/70. But however, towards the end of the closing, even it started around the midday of the US session, there was actually a close to about a 2% sell off, and it actually ended a bearish candlestick pattern called a shooting star. So the levels to watch going forward for today will be at 3518. So if you will start to have a daily close below 3518, there's a risk of the S&P 500 to actually shape a further push down to actually retest this October and September range support at 3230/3130, which is also confluence to the 200-day moving average. Now, moving forward, let's take a look at the Nasdaq, okay, the US Nasdaq index. So as you all could know that the Nasdaq index has actually what we call it, underperformed the S&P 500 due to its component of those technology stocks as well as those stay home COVID team play, where actually they sold off pretty much steeply given the news of this COVID-19 vaccine news. So, but what's important technically over here is that there was actually a failure breakout above the range resistance at 12180. So initially yesterday start of Asia session, there was a word of optimism riding on President-elect Biden victory. But however, this optimism has starts to fade off, and it starts to close below this 12180 level. So the levels to watch next over here on the 4-hour chart will be this 11790, which is the key medium-term pivotal support that I highlight in my weekly technical outlook video yesterday. A daily close below this 11790, I would say a 4-hour close. The risk of us taking down is pretty high towards this 11,100 support level, which is the range support of this potential ascending range support that is in place since 21st September 2020 low on the Nasdaq 100. Okay, so now let me touch on this gold as well. So yesterday gold has a huge sell off yesterday. So the reason for gold selling off is actually inversely correlated with this push up in the US 10-year Treasury yield. So a push up in the US 10-year Treasury yield actually kind of increase the opportunity cost of holding gold. So that's why we start to see gold. We have a massive we call it a sell off yesterday. So let's take a look at the long-term chart of gold first. This is the weekly chart. So the long-term levels, support level, I'm going to watch is at this 1796, followed by 1725, which is the 38.2% Fibo retracement, taken from the recent steep up move, the multi-month steep up move that has taken shape since August 2018 low. In fact, it's a multi-year, two-year move, August 2018 low to the recent July 2020 high from here. So what we could see over here is the RSI, the weekly RSI is still pretty much subdued, keep on tracing a series of lower highs, and it has still some more room to actually move down to test this corresponding support level, which is at this 45 level. So this 45 level, give or take, should actually correspond with the graphical support at 1796 slash 1725. So where do we go here in the shorter term? So in the shorter term, as you could see that gold is still trading in a kind of a big sideway formation from here. So smack up very close to 1971/73 and now reintegrate back down towards this descending range back below this 1930 level. So in the short term, I will use 1930 level as my key resistance to watch in the short term, with key support will be at 1850. So right now it's actually bouncing off this 1850. So what's 1850 is actually the low that I managed to keep this previous down move since September over here. So if we start to see a break below 1850, it could take us back down towards this 1796 support level that I highlighted on the weekly chart. So all in all, what we could see now is a kind of a very massive sell off yesterday. So it's potentially right now we could start to see a kind of a snapback rally. So this potential of the snapback rally maximum potentially 1930. So in the shorter term, the levels to watch, let me draw up the Fibo retracement for you all over here. Okay, taking from the high to the low. So I'm looking potentially at this 38.2%, which is 1894 and 1908. We actually confluence with the upper boundary of this descending range resistance configuration that is in place since 18th of August 2020 high. Now, moving on to the key theme of the story, which is the catalyst of causing yesterday's big move in the market, is definitely the US T-Note 10. So this is not the yield, this is the T-Note 10 bond, which is the price. So what it means that if the bond price keep going up, yield price come down, bond price goes down. Pardon me. I repeat again. Is bond price goes up, yield price come down. Bond price goes down, yield goes up. All right. So on this, what it means that yesterday we start to see a bond price sell off. It means that the 10-year T-note yield is actually spiking up, which is testing that June high at 0.95%. So technically, what we could see over here since the high of March to August and to September, it start to tracing a kind of a very we call it a medium-term topish formation. The key range support of this topish formation stands at 136.95, where the market now starts to actually kind of a bounce off from there. So resistance to watch will be at 139.55, and definitely a daily close below 136.95 should take us not much lower down towards 134.08. So if we start to see this big move on the downside, what it means that potentially gold could see further downside pressure towards the 1796 level, and the S&P 500 and the Nasdaq definitely will actually start to see another leg of potential sell off to actually retest that September October range support level. So guys, that's all I have for today, and I see you all next in my next video.